Sorry about the late start. We hired some new engineers from the New York Stock Exchange to work on our production of the show, but we're here. What a yo-yo market. Friday's action, Monday's price action, looking for direction. You think crude down a buck 50, we'd be rallying. That's not the case. Talked the glitch at the New York Stock Exchange yesterday. Well, what else do you guys want to talk about? It's Tuesday. It's pre-market prep. Let's get fired up.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, traders and investors, man, that 5,300 like kryptonite here. We're down 18 and three quarters handles at 52.7850, way off yesterday's low, way off Friday's low. Buck showing a little strength, up 16 cents, 104.24. TLT up 30 cents here, kind of just climbing its way towards 92 at 91.70. Crude in the red. Holy moly. Buck 40, 72.82. Approaching those February lows at 70 bucks. Gold in the red by 20 bucks, 23.4920. Silver down almost a buck, 29.87 is where you're traded. Bitcoin futures under 70K, but nice consolidation. The futures are traded down $125 at 69,535. Triple D, let's talk about these markets. Let's talk about India. Let's talk about Mexico. Let's talk about crude. We got a lot going on.
Yeah, bring AB here into this conversation here as well. Elections around the world, and obviously the world not applauding these elections. Yesterday we had Mexico, first woman president being elected here. Don't know all the details on her policies. You were saying AB, she's a clean energy girl. EWW really got hit on this though, so unexpected, maybe down 8% yesterday. And then we get India here overnight. Who would they elect over there? AB,
it was a ruling party. It was a ruling party, but they thought it was just going to be like a landslide, to control everything. And then, and then it did it. But hit a new all-time high yesterday in the getting hit today.
Yeah, so this was India's biggest election ever. And from what I was reading about it before, what was interesting was you had the ruling party that was in there. The guy who's been in charge of India has gotten, since he's been in charge, there's been a lot of people brought out of poverty. But he, even with that, hasn't been the most well-liked ruling, kind of a hard, ruler, very kind of strict and stuff. And what was interesting was the people, running against him, the parties running against him. There wasn't one person that was running against him. It was basically just the opposition. And then once the opposition gained seats, then they said, okay, we're going to decide who we put in there. So it was kind of a weird setup going into the election. But like Joel said, not as straightforward, not as big of a landslide as was expected to be going in there. And he's a big economic, business guy. So not really surprised to see with the uncertainty in the election, India stocks kind of stuttering here today.
Well, and I mean, this is a huge move for INDA. This obviously the ETF here been up all year, but we're talking about it giving back half of its yearly gains. So went out at an all-time high, giving back half of its yearly gains in one blow here. So this is a big move. This is a big move for INDA. And INDA has been very good. I mean, this has been, one of those emerging markets. Obviously, we know China's been a mess, but there's been a lot of emerging markets that have been doing very well. India is one of them. Is this a pullback to buy INDA? Maybe diversify out of the US a little bit? Maybe. I think we wait a day or two, see what, materializes here. Obviously, when you get a big whoosh like this, it spooks a few people, especially when they're at all-time highs. But there's a lot of underneath demand here probably for INDA.
Wow. I just want to note, I mean, look at that. I pulled up my data window here. Look at this. It traded 13.6 million yesterday. So people were piling into this thing. I mean, traded 12 million here. I mean, it was like breakout city. Breakout turns into a fake out. We'll see if they buy the dip in here. That is just a big volume. And they They lose their majority. Not people expecting that. I'll just look at this $50 area. You mentioned the gains for the year. It bottomed there twice on the monthly. So if you're buying the dip here, look at this area. But that $50 seems to be major support. Also broke out from that area. That was the highs back in 2021. So. Oh boy, what a big move. We'll see what happens today, see if it can rebound off those lows. And then Mexico, holy mackerel.
Really got hit yesterday.
Oh.
Yeah, so Claudia Sheinbaum was elected in Mexico, the biggest landslide victory in a Mexican presidential election ever. And like you mentioned, Dennis, Scheinbaum's background is as a climate scientist, so she's seen as more of a leftist, maybe kind of like a Bernie Sanders-esque type candidate. So it's not surprising to see stocks go down. If you look at the spectrum politically of people that are more laissez-faire, super business friendly, people that are willing to kind of crack down on businesses and stuff, definitely more on the latter here.
Right.
But from reports from, big banks like JP Morgan and stuff like that, a lot of them are saying basically like, hey, this isn't going to be, the end of the world for the Mexican economy. So I think more of just a gut reaction. And like anytime you have the uncertainty of we don't know exactly what she's going to do, again, not surprising to see this reaction, but I wouldn't be, worried about like, oh, Mexican stocks are going to be, getting crushed for the next 4 years or however long she's in there. I think we just need to wait and see exactly what ends up happening.
Markets hate uncertainty, though, and they sell first and ask questions later, and that's what you're seeing here with EWW. A little bit of uncertainty. If she's not as much pro-business, we know that can hit stocks. So obviously, I don't follow the Mexican economy very closely, and I don't follow the EWW very closely, but these are big moves, and I don't think you can discount that when we're looking at the big down move in the S&P. You get Mexico selling off and India selling off, and you get some profit taking here too, and move it back to the U.S. markets here, because yesterday's rally was indeed a selling opportunity here. Not a whoosh down. We talked about the imbalances on Friday, and often those do retrace. We did see some weakness in the overall market there yesterday, but then again, like clockwork in the afternoon, they start buying it back up. You can't help these buy the dippers. They just reemerge. Will today be more of the same?
Boy, I'll tell you, this market, I mean, there was some weak economic data that came out later in the day. There was a catalyst here. But, I mean, just, Dennis, great call. You talked about those buying balances on Friday and happened. Just seems like the market, it's just unsure right now. I mean, these kind of move. I mean, it's always no one knows exactly where it's going, but just the move that we had on Friday, and then the move that we had yesterday, just I don't like them. I mean, I like that we rallied back, but to me, the volatility's picking up. There are other, we have, not much going on until Friday, but it just seems like, man, people are unsure. There's nervousness in the market. I'm not like turning all super bearish or anything, but crude down like it is, the market should be up. There's other catalysts here. I just don't see why we're having these big breaks. It's always great to have the recoveries, but it doesn't feel like a stable market. How's that?
Yeah, well, there's got to be some people who, are sitting on some pretty significant profits here too. When you're up at all-time highs and you're getting some uncertainty, that equals profit taking. So we've talked about having a little profit taking sell-off for a while. We did get a little one back in April, but then May they just buy us right back up. So buy the dips just continue to emerge. I do want to talk the glitch from yesterday.
Yeah, wait, before we do that, Dennis, there was one kind of funny thing from the Mexican election I was going to share.
Sure.
So Sheinbaum is the first woman and first person with a Jewish background elected in Mexico. And after her victory, she came out and she said, I thank my husband, Jesus, and, everyone who voted for me. And a bunch of people came out and said, she's not really Jewish. Look, she's thanking Jesus and all this stuff. Well, it turns out she was thanking her husband, Jesus, not Jesus. So they were a little confused there.
I was going to say, you had me confused there too.
Yeah. So so she's Mexican. So she was, thanking her husband, Jesus, and people thought she was like a fake Jew and all this stuff. So I just thought it was funny on Twitter yesterday, seeing that confusion. But yeah, let's get into the glitch. And just to your guys' point, I mean, it's interesting because I think you go back a few weeks ago and anytime the market was kind of stuttering out, it was because oh, these rate cuts aren't coming. And now we're getting economic data that would be conducive to getting rate cuts, that the economy is slowing down, and the markets say, no, not like that. We don't want rate cuts like that. We want rate cuts because, inflation has fallen, not because the economy is slowing. Well, guess what? Those things go hand in hand. So very interesting, I think, just breaking down this kind of market reaction here to getting weaker than expected economic data, which it's weaker than expected, but that should be expected at this point. That's what the Fed has been trying to engineer now for, a year and a half. But let's get into the glitch from yesterday, Dennis. So we saw a few different stocks. BMO was one of them, Dennis, and we had talked about Bank of Montreal recently, but Berkshire Hathaway and Chipotle were the two big American ones that saw this, glitch that essentially showed the stocks down 99% at one point yesterday. This happened like right off the open. So within the first 15 minutes of the open, the first one was at 9:44 a.m. Eastern. The second one was at 9:50 a.m. Eastern. And again, Berkshire Hathaway, Chipotle, those were the two biggest ones that I saw implicated by this. You don't even see it on the chart anymore, Joel.
No, they canceled the trades, so they'll remove those from the charts because obviously it screws up the charts. And when they cancel trades, they bust trades. Yes, they bust trades. We have clearly erroneous rules, and if you want to see those actual rules, just Google clearly erroneous rules, and you'll find New York Stock Exchange or NASDAQ. And it's different for different stocks. Sometimes it's 5% away from the last, 10% away, 20% away, but there are rules for busting trades. When stocks are trading down 99%, you can be fairly confident that all those trades are going to bust. And what happened was, it wasn't like these were flash crashes. So it wasn't just like, and I actually, CMG was the first one I noticed because I was like, oh, CMG is halted. I'm like, is there news? And then I looked, at the halt, so you can go to NASDAQ halt and you look, and I thought maybe it was limit up, limit down. Maybe it's just, all of a sudden, had a really big down move. And I'm like, well, it's not limit up, down, limit down either. It was halted on code M, which you don't always see. And it's an exchange issue. And then I looked and I'm like, oh my gosh, this trade's going off $2,000 below the last. Now, it was only a number of odd lots on CMG. There wasn't a lot of trades, but I was looking, it was like $1,047. There was a bunch of odd lots. Why those trades, happened, or why those trades were put to the tape, I don't know. I don't think the New York Stock Exchange or, the NASDAQ has said why those trades were there yet, but they did cancel them. And then, we saw CMG, but then it was like cascading. Then Berkshire Hathaway all of a sudden was down 99%. Warren Buffett with a really funny tweet after that. If you could find it, AB, go to his Twitter feed there.
Well, Dennis, I think you might have gotten got on Twitter yesterday.
Oh, it wasn't his Twitter? It wasn't. It was a deep fake? It was a fake Twitter?
It was an AI fake. Well, I don't know. I'll show
was it
you,
a fake Twitter thing?
I'll show you Warren Buffett's Twitter feed.
Oh, he doesn't have anything. Because he hadn't tweeted in 3 years.
I know. I just looked at that. I'm like, what's Dennis talking about?
Fake.
Yeah.
Let me see.
With the new, everyone can get a blue check mark, I think
it was fake. Anyways, it just said Warren Buffett. It just said HODL. It's like, it was down 9. It said there was an article, Warren Buffett down 99%, and Warren Buffett, it looked like he tweeted out HODL, HODL. I thought that is hilarious, and it's not real. I was like, that would have been just hilarious.
His last tweet was from 2016.
There's no HODL tweet. They made that up. Oh, that was such a good one, man. Buffett, I wish he would have did that. I would have been awesome.
His last tweet, Obama was still in office.
It was still funny though.
Like, what's
Buffett, I thought, man, is he witty for all these years old to come up with HODL after all that. But yeah, so Berk A was trading down 99%. Bank of Montreal was trading down 99%. Is
that what Canadians call it, Dennis?
Bank of Montreal, yeah.
No,
BMO Bank of Montreal.
A?
Yeah, I know. I'm looking at this and I'm like, oh, my BMO's down 99%. I own BMO stock. I'm like, well, that's not great news. And I have a lot of my money in BMO. That's not great. And people are, somebody tweeted me, is this the next Signature Bank? And I was like, I sure as hell hope not. But, I knew right away, like, these aren't real trades. You could look, like, well, first thing you do, you see a stock halted down 99%. Go to the consolidated tape, look at the trades. When you see a half dozen trades only that are way outside the market, it's obviously, some type of glitch. So what happened, we don't know. But obviously, there's rules in place. There's limit up, limit down. Why limit up, limit down? You're not supposed to be allowed to trade outside the band. So I've got to think these were just misreported, because the trades aren't even supposed to be allowed to occur outside the bands. So, and obviously these trades did. So I've got to think there's some type of misreporting or something messed up. So anyways, But no harm, no foul. It made a few people nervous, but they busted the trades and the stocks are back to trading normal here this morning. Not sure
Hasn't there
exactly
been a
what the
few
glitch got.
glitches? Is that I thought I read somewhere that there's been a couple glitches. Is that the only one over the past week or so, or has there been
I
other?
don't remember other ones,
Okay,
but there may have been.
yeah, okay,
I mean,
yeah.
glitches happen. The one thing, and here is an argument I'm just going to say quickly about this is people are saying, why don't we have instantaneous execution? Why don't we go, to instantaneous, not instantaneous settlement? Why don't we have instantaneous settlement?
That's
Well,
why.
this is one reason why you should not have instantaneous settlement, because you're instantaneously settling these trades that may have actually occurred, even though we don't know why they occurred. Money's already changing hands. At least when you've got one day, you could cancel the trades. Money hasn't all of a sudden changed hands, because you could get maybe there's somebody over in some foreign country or whatever, and then they withdraw their money really quickly, and then you can't get it back. I mean, there's so many things to think about here. But when you have at least T+1, at least it gives you a day to catch mistakes, to catch trading errors, to catch stuff like this. So I would say T+1 good, T plus none, meaning going to instantaneous settlement, then you open a can of worms. So if regulators, if you're listening to it, stick with what you got. The T+1 is fine, seems to be working fine so far. I don't think going to instantaneous settlement for this reason, because when you get errors, you get mistakes. Now you've already got the money changing hands. Now you got to go get the money back. It all just opens a can of worms. Leave it at T+1. We're fine.
Yeah, and we had, I mean, the T+1, that's as of like 2 weeks ago, which really the only implications are for ex-dividend dates.
Ex-dividends, yeah.
And like maybe
I hope
some
Benzinga
small...
adjusted their ex-dividend calendars.
That's a good point. I'll
You better ask the
about
news desk. I never even looked, so I'm
I'll
sure they
inquire
did.
about
Our
that.
news desk is good. I'm sure they're all over it.
Let's talk some oil real quick. Let's go to USO. Crushed yesterday, traded down around 4%. Crude and WTI, Brent crude. This comes after OPEC Plus announced that they will slow down and halt some of their planned production cuts. So obviously just basic economics, when they say we're going to cut this amount of production and take this amount of oil off the market, that's going to help stabilize the price and increase the price of oil. And when they say, actually, we're gonna release more barrels of oil, we're gonna produce more, that's going to hurt the price of oil. So you saw that get crushed yesterday, and really since the end of April and early May, this has come down a lot. And you saw that yesterday in a lot of the energy stocks, whether you were looking at Chevron, ExxonMobil, across the board. Closed down yesterday. I mean, Exxon closed down 2.5%, basically the same for Chevron. So on one hand, you're not great if you see oil prices just declining day after day, because that's typically a sign of a slowing global economy with less demand. On the other hand, gas prices have been higher here in the US. So maybe on the flip side, on the bullish side, you could say, okay, well, this should help gas prices come down a little bit and maybe help our inflation readings. So either way here, something to watch for today is the oil prices.
Usually, what we have seen is that oil lately has been inversely correlated with your IWM, because, obviously oil going up, inflationary, nobody wants inflation because they want interest rates lower. Oil coming down here is a huge thing for the consumer. So I'm actually surprised that we are selling off in the overall market. It's one thing to consider if you're entering shorts right now and saying the big correction is coming, here we go. Oil not working in your favor here right now, because we saw clearly in April. Well, maybe it's what didn't really happen in April, because April we were selling off too, but towards the middle of April. So just getting a little more. That's when oil really started to sell off. And that's when we had the reversal in the IWM, where it started to come up a little bit there too. So I do think there is a slight inverse correlation between oil and the IWM. So keep that in mind. Obviously, all stocks seem to be weak here today. They're selling first and asking questions later. But if oil continues to stay weak, I got to think that's actually good for a lot of companies out there.
I agree with you. I mean, especially, the big thing has been the inflation picture, right? And this is a big component of the inflation. It also, hits the consumer. It hits, companies as well. So this is a big surprise. The thing that, and I'm sure OPEC knows that, is that everyone else is cranking it out. I mean, U.S. is producing more. People, all the other countries, even the ones within OPEC, that say they're not, they are. So it's just they're pumping. They pull as fast as they can pull it out of the ground and sell it. But yeah, that's another thing that it should be a major catalyst for the market. I looked at the move in the USO. That's coming down to the $70 level. But you got to think that I'll go to the crude oil futures here. Our February low was back just under $70. That's a psychological level. So that was the February low, which was also the yearly low. So just a horrible few days for the market. And I would say, if you want to, cover short or maybe look at a potential long, for right now, there's nothing until you get another $3 lower. But we'll see, considering the move that it had from 80 to 73. Whew, that's just straight down. So big move in the crude oil market. Like you said, should be helping the U.S. market. Your airlines, nope. Your cruise lines, nope. So implications here in the oil patch. And I just want to bring up Oxy here. I mean, what's Warren doing with his Oxy, Dennis? I mean,
Warren. Total. He tweeted it yesterday. At least he fake tweeted it. It's total. But you know what? This Oxy trade has worked for us on pre-market prep a lot of times. Been a while since we talked about it. 57 to 58. I'm going to buy it this time. It's worked too many times down here. I mean, and I didn't do it the very last time, and that was a really good move there too, and I missed a lot of that last move. So write it down. Oxy, 57 to 58. Even put your order out there because it has been working for a very long time. I think it works again. Great support down there. 55, 56, 57, 58. That's the Warren Buffett buy zone. We've had the Warren Buffett put on this stock. He's bought a lot of stock down there. He probably buys more down there. They've probably forgotten the market that it is the buy zone because this market has a short-term memory. So if all of a sudden you get a filing and Warren Buffett bought more Oxy, it'll pop up on it. So I think, the Warren Buffett buy zone, we're getting close to that here. 60 might be a little bit early. He's been in the 57, 58, 59 area. So you can clearly see it on the charts too. I mean, the stock just doesn't want to break through that area because Warren Buffett won't let it. So I like being on the same side as a whale, and especially when I know the whale is Warren Buffett.
I want to know what former professional trader is in charge of Biden's strategic petroleum reserve, because they keep doing this perfectly where they'll unload some barrels when oil's high and then they buy it back when it's low. They added it. They bought back 3 million barrels for the strategic petroleum reserve yesterday as prices went lower. And if you look at the chart of when they've done this, they're buying low perfectly and selling high. I mean, it's been someone over there in the administration. It's probably not Joe himself, has been doing some pretty good trades there on the oil.
I think it's the channelingstocks.com kid.
Okay.
The one that retired.
I mean, well, and also with oil, we do have a potential positive catalyst on the horizon. If the Oilers end up winning the Stanley Cup.
Oh, yes, true.
That's got to be good news.
I don't know the chat saying that. If the Oilers win the Stanley Cup, does oil rally on that?
It's got to, right? I mean, it's like
Oilers oil. How does it not?
Yeah, exactly. What about if the Panthers win? Then what's got to run?
Oil
there?
tanks.
Oil tanks. some cat stocks. We got to buy Caterpillar.
Oh yeah, Caterpillar. So it's Caterpillar versus oil stocks here. That's what's happening.
Yeah. All right, let's it's not a huge.
We didn't talk GME yet.
What's there to talk about, Dennis?
What's there to talk about? There ain't nothing to talk about. The story appears to be ending as quickly as it started here. I sold my stock at $40.75 yesterday, pre-market, as soon as I woke up in the morning at 6:45 a.m. Sure glad I did that, because if I didn't, I'd be giving back almost the entire gain here one day later. I don't know what other magic tricks Keith Gill's got. I guess, Morgan Stanley's talking about investigating, or they were investigating and trying to block him from making some of these trades, which is absurd in itself. I have no idea why they even are looking into his account, let alone talking about blocking his trades. You want to report to the SEC. I mean, it's one thing, but why in the hell are they looking in his account in the first place, really, is what I would argue. I guess they have the rights as a broker. They have a rights to make sure he's not doing anything. But, buying calls is not illegal. So I have no idea why that story
Dennis, I just got for an order execution. So when you woke up and you went to your desk and you saw it, did you just hit the bid? Or
Yes.
did...
Yes. And it's tight too. It's like a nickel wide only. Yeah, no, I don't even play games. I woke up 6:45. I'd slept because the Oilers, we're going to the
Yes. Yep.
I slept in. I got to my desk at 6:40. Actually, I woke up, got a little blur. I knew I had GME and I knew it was going to be up. So I grabbed my cell phone. I looked at my quote on GME and it was up at like, I don't know, like $41. I was like, I got to get down there. I got to go sell that stock. So I literally crawled myself out of bed as quickly as I possibly could, logged into my curry up, log in. I'm not excited to try to get rid of this stock. Anyway, sold the stock. Said, thank you very much. Again, the reasons I own GME is one, it's due to report next week. Two, I'm like, it started to hook and started to look a little bit productive on the chart. The only reasons I never long GME. It just happened to work out perfectly. I was very excited. Thank you, Keith Gill. I guess I got the trade because Keith Gill posted his position there. So I got lucky. His luck. So anyways, but yeah, I sold it quickly as I can. So the sell is actually skill because I'm like, I know. I was very confident. I said it yesterday that I think it's going to give some back. I didn't think it was going to give the whole damn thing back, but here we are 24 hours later. We've pretty much given the whole thing back. Somebody said he reposted his position. He hasn't sold any shares. I don't know if that's true or not. I don't know if anybody knows what's true here anymore or what's not true. We don't know if it's Keith Gill. We think it's Keith Gill. I guess Morgan Stanley's looking into Keith Gill's account, so it sounds like it's Keith Gill. Citron, Andrew Left is speculating that he has a hedge fund backing him, which we kind of speculated as well on this show. That there could be some of that too. We don't know how he went from 35 million to 200 million all of a sudden. There was maybe some trades that could have happened on the last GME pump up. I don't know. But what we do know is whatever money was being made yesterday from the GME memesters has mostly been vanquished here by Mr. Market over the last 24 hours.
Yeah, just some thoughts on the, potential ban from E-Trade on there. But what I assume they're seeing this and they don't want to be implicated as like the broker that allowed this to happen. I saw Rod Alsman, who's kind of an expert on this subject, tweet. I'll pull up his tweet thread about it yesterday just for some more color here. So he said, I asked Perplexity, who replied, if a U.S. brokerage believes that one of its retail customers is manipulating markets, it has several options and obligations to address the issue. Internal investigation, contact the customer, and then third, restrict account activity. So
they have the rights.
I don't know if they've, I don't know. So the brokerage can impose restrictions on the customer's account, such as limiting trading activity, freezing the account, or requiring pre-approval for trades while the investigation is ongoing. So I don't know if they've gone through these first two steps of doing the internal investigation and contacting the customer. But definitely, I mean, it's just an interesting situation because I think there's this whole gray area of, okay, is posting a meme, considered anything market manipulation? No, probably not. But
that's the problem. Like, I mean, is there intent to manipulate the market here? Probably. Can you prove that intent? I would say the only case they would have is if they can find some type of messaging with other traders or something.
Private
messaging.
Yep.
Like if the SEC really went into investigation, started looking through his private message, if there was like a whole plan laid out to do this, then you'd have some trouble. But is it illegal to just post a meme, or post your positions? It's transparency. I mean, I don't think there's anything bad about that part of it at all. I think they'll have a very difficult time prosecuting unless there's some type of message trail that really lays out some master plan to manipulate the stock higher. That would be where, if he did that, that's where he would be in trouble. If he didn't do that, I think you have a real hard time prosecuting this.
All right. Well, let's see. Is there anything else on GameStop we want to hit on before?
I mean, all the other memester stocks basically opened at their highs, and AMC opened basically at its highs. What we have seen here is lately when these stocks, and AMC opened right at its high tick and straight down. I mean, these have been selling opportunity, folks. And if you're coming in here and buying stocks up 25, 30, 70, 80% in the case of GameStop, you are absolutely doing it backwards there. I was so confident. Like, I think about me in bed and I see my GameStop stock up there. I'm so tired from the night before from the Oilers win. I'm like, I don't want to get out of bed, but I'm like trying to quickly get myself out of bed as quickly as possible to get down to my computer to sell my stock. That's how convicted I am in the sell. I'm like, it's not a question. I wasn't even questioning, if it's going down, it's when it's going down. And it went down, obviously, immediately. It started going down. It popped up 4 a.m. By the time the real markets, people start getting to their desks at 7, 8 o'clock, they're like, thank you very much for the windfall is what it is. Win the lottery, take the money and run. So on these memester pops, when you don't have fundamentals, it's not like NVIDIA. People say, why don't you sell NVIDIA when it goes up 80%? You want to know why? Because NVIDIA is growing this company fundamentally. GameStop is not, folks. I'm sorry, the GameStop, but this isn't a fundamental story. This is a story about, one person, Keith Gill, trying to drive the price higher or driving the price higher. Not trying, he did. I mean, this is just, an opportunity. If you just happen to be long this thing, this was just a huge selling opportunity, folks.
What do you think? Like we spend time on this. The media spends time on this. What do you think? Like when we talk about we talk about the meme stocks. We know what they are. What percent of the investing public do you think participates in these, trading these stocks?
You want to know what? In retail, it's a lot higher than you think.
Okay.
Because I have random conversations with people sometimes, and they're like, "Oh yeah, I still own some GME." I'm like, "Oh my gosh," or I still own some AMC, but I'm waiting for it because it's going to go to the moon and it's going to come back. I'm like, "Oh my gosh, the stock is down." Like GME is not down nearly as much, but AMC has just been like the disaster of all disasters. The stock's down 99.5% from the highs. It isn't coming back, folks. It's going to get, it can get a little pop here and there, but they believe with their soul, Joel. They believe with their soul that eventually the shorts are going to get squeezed here and we're going to they do. And I mean, sorry, folks, it's just not being educated on how the markets work. Now, GameStop, it held on really well. It's a little bit different than the AMC story. They raised a lot of cash in good spots. The management really took advantage of all those pops. Basically, taking the money that the shareholders were giving them. So it's a little bit of a different story. And you got Keith Gill really on that one. But, and we've seen, it's had some pretty significant pops. But you still got to use these as selling opportunities. And that's where people go wrong. They get in these things. They think they're going to change their whole life, on these stocks. Most of these stocks, again, I'm going to say buy good companies at reasonable valuations. Some of these companies aren't good, or maybe they are good companies, but they're not reasonable valuations whatsoever. So, I mean, that's what you've got to look at here. And most of the time when your friend's telling you about this hot stock and this is, you go to your barber and he's telling you this is the stock you got to invest in, most of the time those are tops, not, bottoms there. And these are times to sell. When this general public, when you go to the gym and your buddy at the gym's telling you what this huge stock, that's really going to go, these are more selling opportunity, folks, than they are buying opportunities.
All right, let's go ahead. I see our special guest of the day hanging out backstage. It is a T3 Tuesday. We love our T3 Tuesdays here at PreMarket Prep. So without further ado, let's go ahead and welcome Sammy from T3. A little bit of a different guest. We're used to getting David or Scott here on, so good to switch it up today. Let's go ahead and give Sammy our special pre-market prep welcome and see what he's been watching when we come back. How's it going? Sorry, Sammy, I didn't want to say the last name because I didn't want to butcher it. Is it Abusaad?
It's Abusaad, yes.
Oh, you said it perfect.
I had it perfectly. I should have just went
nice.
with it. I should have went with my gut.
Should have went for it.
How are you doing this morning?
Doing great. Thank you for having me again. Actually, I've been on this show once before.
I know. I don't think I was here when you.
Joel remembers everything.
It was a Friday. It was a Friday.
Even though it's the day of the week. Joel.
No, he's saying that because I said I wasn't there. But Sammy, how are you doing this morning? I mean, we've got some market volatility the past couple of weeks. What have you been watching? What have you been trading?
Yeah, so the market seems like it lost the momentum that it had at the beginning of the year. So now it's not the time to really push it because there's not much follow through. But there are certain sectors that look good, such as retail looks good, like Nordstrom looks good, which I'm in. Best Buy, Canada Goose, a lot of the retail companies look good, as well as Bitcoin, which hasn't gone anywhere at all. This is what I have in the background here. Actually, I switched the chart here. Here it is. So Bitcoin, I think, is setting up to go higher, even though it hasn't gone anywhere in a while, but it's basing at the all-time high. What does that mean? It's higher, probably. So again, the general market is not great, but there are certain sectors or spots in it that one can focus on. Also, China, I think, looks pretty decent.
You're like China still. I started breaking down. I got suckered into the China rally about 2 weeks ago there, and now it's not looking nearly as good here. Is there a turnaround eventually going to happen? I've been waiting here for years for this China turnaround. Is it going to come here?
I think so. To tell you the truth, just the honest truth, I was up like $220,000 on the China names.
Oh my gosh!
Yes, and I gave back almost 100 with that sell-off that you're talking about.
Yeah, it sucks.
But I do think the China market has bottomed, and just approaching it from a technical point of view, objectively. So I'm long the yen, which is the leveraged FXI. I'm long the CWeb, which is the internet companies, the Chinese internet companies, and I'm long a few other names. I think they still look good. I wasn't expecting as deep of a pullback, but they still look good to me.
Fundamentally or technically? You said
technically.
What's your poison? Which China stocks do you like?
So unfortunately, the one that I like the most, I just got trailed out of yesterday or the day before. It's TME. It's been up and up for a long time, and I just got trailed out of it. But I do like BZ. I don't even know the name of the company. Tell you the truth.
Benzinga. He likes Benzinga.
I like BZ. I like Billy, BILI.
Oh yeah, Billy. We used to call it Willy Billy.
So there's a bunch of names.
Trade it now.
Yeah, I like JD. Not bad, I think. Baba's one of the weaker ones, so I don't like it as much. I like BEKE. I'm looking at the names. So there's a few names that I like that I'm in long.
What's your time horizon on these trades, Sammy?
So I'm hoping to hold them for as long as possible. So
so you're talking about like long-term investments in these
correct.
Chinese
These
names.
would be longer-term investments.
Yeah. Do you? I mean, so what do you do when you're planning on making a long-term investment, and then next thing you know, you look at your account and you're up $200,000 on the trade? Do you start thinking, oh, maybe this was a trade and not an investment, and I should sell some of it?
This is one of maybe the single most difficult thing about trading is that it's very hard for us to disassociate from the P&L, from dollar counting. And so if you're focused on the result rather than the process, you're gonna sell prematurely. You're gonna mismanage your trades. The most important thing is to be focused on the process and doing what you need to do, irrespective of what your P&L looks like. And this is very hard because we're emotional beings. So it's a difficult thing, but the most important thing is to be detached as much as possible from the P&L and just be more focused on doing what you're supposed to do. Focused on the process, basically.
But nobody sells at a loss, Sammy.
Nobody sells at a loss.
At least on Twitter.
What about Sammy? I was watching some of your videos. I know in the past, at least a couple months ago, you were talking about small caps. How are you feeling about small caps as a whole right now? And are there any individual small cap stocks that you've been buying or trading?
I've had at certain points this year, earlier in the year, I had like over 100 different positions in my account, and that's like
all long or
all long, like with 1 or 2 or 3 shorts. Like right now, I just have TDOC short, 1 short, because it's a Cathy Wood stock, so I went short. I'm kidding, because it looked good. So I had a lot of small cap stocks long, but they got destroyed recently, so a lot of the positions got trailed out. I don't know if is Robinhood considered small cap, so I'm heavy in Robinhood.
You're long Robinhood?
Yeah, it looks good to me long term. I mean Coinbase because it's a Bitcoin stock and it looks good, but I don't know. I don't really break down my portfolio by whether it's long term. I mean small cap, blue chip, whatever. I just do it based on the technicals.
What time frames? Like, so you're looking long term. So when you are you doing obviously daily, weekly, monthlies, or tell us about your preferred method of technical
Yeah,
analysis?
so I actually am a day and swing trader as well. So I day trade every single day and swing trade. And then I like to hold some positions long term. So my preferred method is, to tell you the truth, is just one overnight. Like I get in today and I get out the next day once the company reports earnings, because I try to get in ahead of earnings and get out once the company reports. But I like also to hold certain positions long term. So I have different time frames. Could be from, as a day trader, minutes to hours, could be days to weeks and months if it's a long term play. I'm
Talk about
very
these earnings
versatile as a trader.
trades. Talk about Sammy. Talk about these earnings trades, because this is interesting to me. So you actually hold through the earnings?
Yeah, so this is something that I started to do. I've been trading for, I don't even know if I started in 2004, 2005. So either 19 or 20 years.
Sure.
But this is the newest strategy that I started to do.
I like new strategies.
In 2017. I noticed that, so this is what I noticed, that because I scan after the close every day, I noticed that stocks that are really bullish and are selling off a little bit ahead of earnings into their like rising 20 period moving average or into support, they tend to gap up on earnings. I noticed it in 2010 and I completely ignored it for 7 years because I don't like to gamble. I'm not a gambler. So I never touched it. And then in 2017, I think the first 3 months of the year, I was struggling, like I couldn't make money. And I decided to give it a shot, to like devote some time and energy to checking out the earnings strategy. And then I just, it became a strategy. It became something that I do. So I get into bullish stocks that are showing some momentary panic selling ahead of earnings, because that means the expectations amongst investors for that stock, for that bullish stock, are very low. Otherwise, they wouldn't be selling it ahead of earnings. So I like to buy weak stocks, short-term weak, but long-term bullish stocks ahead of earnings. Or vice versa, if it's a stock that's bearish, but is showing some recent bullishness, I like to go short that stock. So that's the crux of it, basically.
Following the overall trend and then fading and saying that, well, this overall trend for the stock, so the odds are that the earnings maybe not that great, and then maybe the opposite where, well, there's a little bit of profit taking before the reports. But I like that strategy. I mean, that's, what I talk about is understanding the overall trends and buying dips on stocks and uptrends and selling, rips on stocks and downtrends. And you're doing it right before the earnings. It's very interesting. Right. And it works, and it seems to, obviously you're going to have some losers in that strategy too, but it seems the winners are outnumbering the losers.
For sure. In fact, every single play that I take is published, published in a newsletter, so I can't, fudge the numbers. And since 2017, if you took every single play with $25,000 per play, exactly 850,000. The plays have made $850,000.
Wow!
Exactly. And again, these are published. I mean, this is published results.
Yeah.
So that's what I do. I love that strategy because there's not much work to it in it that goes into it. You just download the earnings calendar, you go through the list, and you come up with a few items that you like, basically.
Well, Sammy, what about, going into today's action, are there any trades or any stocks that you're looking at that you particularly like?
I haven't started the work yet. So
we got to join your trading room to get those trades. We have that QR code on the bottom of the screen. Do you mind telling our audience real quick what they will get if they sign up to trade with Sammy, to trade with you all next week for free?
Absolutely. But just one last thing. So last night I called HQY long on earnings and GTLB short on earnings. So notice HQY is up 5% and GTLB is down 1.7% as of right now. And those were sent out in a newsletter yesterday before the close. Okay, so I have an open house next week where you get my newsletter for free, basically for 5 days in a row. And you can check out the swing trading that I do, the earnings plays that I do. And you can also join me in the day trading room where I call out day trades from the open till close. So it's a kind of a double open house, and I'm really excited to be hosting it. I do it very rarely, so I'm excited to be doing it.
Okay, the chat's asking the question. I got to ask the question too. One stock that this did not work on recently was Dell. Did you do Dell, and was that one a hit? Did you get a hit on Dell?
So Dell was actually a longer term play. I just didn't exit timely enough. It wasn't an earnings play.
Oh, okay.
So
Oh, you didn't do it off the earnings.
No, I was in it as a longer term play, and it gapped down.
Okay.
But I was already in it for a while. But yes, I didn't do it as an earnings play.
What about, I mean, any earnings plays this week? We have HPE, Hewlett Packard Enterprise tonight, Lululemon tomorrow, CrowdStrike. Are you doing anything there?
So let's take a look. So the way I do it is I scan the day before they report, not ahead of time, because I want to see what the picture looks like right before earnings. But I can tell you this much, that HPE looks very promising. Lululemon looks slower, but it's already down a lot, so I probably would avoid it. And CrowdStrike looks like it topped out, but the trend is up. I try not to go against the trend. The only one of the three that you mentioned that looks pretty good, I think, is HPE. But like I said, I scanned just the day before they report. So today I'll be scanning for companies that will be reporting after the close today.
Okay.
Or before the open tomorrow.
So that's just your gut reaction there on those. So that's, I mean, we'll see.
So Lulu looks slower. CrowdStrike, I wouldn't play it long, even though it's been bullish, because I think it topped out. And then HPE is the one of the three, looks the best by far.
You know why I like the HPE one too? I'm with you here, Sammy, is because the HPQ gapped up as well. I like that idea where, obviously the companies are separate. They're not together anymore, but there's still legacy overlap here. And, we watched HPQ gap up 18% on theirs. I kind of like this HPE. You may actually talk me into it. I wouldn't do a big size position on these things because obviously, these are big winners or big losers here. But I might even try that one HPE. I just wrote it down into the earnings report.
The average gap over the last 7 years, the average gap has been on earnings has been 6.3%. That's the average gap, just so you know. By the way, HPQ looks really good long term. So I like it a lot too.
Sammy, real quick.
Oh, go ahead. Go ahead.
I was going to say real quick before we let you go, and I'll let Joel go too. How's Scott doing? How's Red Dog doing?
He's doing well. He's taking a few days off to deal with, with what he has to deal with, but he's doing really well.
Okay, good. We love Scott here on the show. We've had him on a number of times, so we wish him the best. We hope he comes back healthy and stronger than ever. And hopefully, here in the next few weeks, we'll be able to get him back on the show.
Thank
Joel?
you. Thank you.
No, that was it. I just wanted to ask about Scott. So you took the words right out of my mouth.
I stole your.
No, that's okay.
All right. Well, Sammy, it's been great to catch up with you. Thanks for making your return to pre-market prep. Good luck on your trades this week. We'll have to catch up with you again soon. Again, guys, if you want to trade with Sammy for free next week in his virtual trading floor, scan that QR code in the bottom right of the screen. We also have a link in the description you can hit if you don't want to deal with the QR code. Sammy, any final thoughts before we let you get on with your busy Tuesday?
No, just remember to approach trading like as a business and be very objective and rational about it. And in the long run, I think you'll do well.
Got it. Always good to understand that psychology behind trading. Very easy to get caught up in it. Well, Sammy, again, thank you for joining us today. We'll let you get on with your day, and we'll see you again next time.
Thanks so much. I appreciate it.
Thanks,
Thank
Sammy.
you.
All right, that was Sammy Abusaad from T3. We love our T3 Tuesdays here. Again, guys, go hit that link in the description or QR code in the chat. Since we already mentioned earnings a little bit with Sammy, let's get into some that we have this week. We'll go in chronological order. Let's go with GitLab first, which reported last night, GTLB. And from what I saw, the numbers were pretty decent, but the stock getting hurt this morning, so I'm going to assume that means some lighter guidance. Let me go ahead and pull up the exact numbers here in our trusty Benzinga Pro. So EPS came in at 3 cents, beat by 7 cents. They were looking for a loss of 4 cents. Revenue of $169 million, beat by $3 million. Guidance. Oh, even the guidance topped expectations, but I guess not enough because the stock again is trading lower this morning. Not a lot, a little bit over $1, about 2.2%.
Here's why his strategy is solid. Because when you got these stocks and these eternal downtrends or these long-term downtrends, when they get the pops on earnings, even when the earnings are decent, it's bag holder central all over the place, and they're quick to come in and take profits. And GitLab is a fantastic example, because if we go to the chart from last night here, Joel, you think, oh yeah, it just went straight down. It did not go just straight down here. And if you bring up your daily, you'll see it there. It went all the way up to $53. So you would have taken some major heat if you had this strategy on. But if you just closed your eyes and went to the bathroom for 20 minutes and then came back, I don't know who goes to the bathroom for 20 minutes, but if you would have came back or make yourself dinner, whatever you want to do, you'd been okay. So selling the pops on these stocks that are in these downtrends just seems to work. And, you know, you would have got a really good price, 52, 53. You know, it was up there. It wasn't like that just like went up there. It was up there for a few minutes. But again, bag holder central, these stocks. And eventually, if you hold on long enough, a lot of times they come back down. So the overall trends just are hard to break. When they're in hard downtrends, it's hard to break even on a decent earnings report. When they're uptrends, it's hard to break even when they have disappointing earnings reports. So that's your problem here with GTLB being long and saying this is going to be the bottom. It's just everybody is down money and everybody wants their money back.
All right, I see someone in the chat asking for Eli Lilly, Jackie. Let's go ahead and pull that up. This is one of my biggest positions in my long-term portfolio.
Ooh, you're a genius over there, AB. Tell us your long-term portfolio right now. All of it. I want to know every stock. Now, how many stocks do you have in the long-term portfolio?
This is in my managed account. Let me pull it up real quick. So
bring it up.
Let's have your manager on.
I'm telling him. We are the managers here. Fire managers and hire Joel Dennis.
I asked him.
Managed accounts.
He actually was in town over the weekend. He was playing Oakland Hills, the golf course up here with his son, and really who I'm good friends with. That's how he got that's how I got hooked up with him. But he's doing me a favor because I'm like below his threshold for what he would normally take as a client. But he's just kind of doing me a favor, and he's pretty good so far. Let's go to all holdings by market value.
How many? Tell us how many stocks.
Oh man, there's a lot of, different small
ETFs,
like ETFs and treasury ETFs. Like the number one thing is the IVV, what is the IVV? Let's see. Is the iShares Core S&P 500 ETF. So that's the biggest one. Eli Lilly is the second biggest holding. Burke B is up there in the top 5. Microsoft, TDG, AVGo, Broadcom. Let's see. MasterCard is up there in the top 20. Apple, Amazon, Google. So a lot of large caps.
He's a mega cap guy.
Yeah. I think we kind of just cycle in and out of like different large caps and ETFs and
he's a
whatnot.
Mega cap guy. That's kind of neat too.
I did have him buy some Celsius a while ago, which was doing really well until the most recent downturn. I don't know. I'll keep watching the activity to see if we make any interesting buys or sells. Because I do look at that sometimes, like when he sells something, I'm like, oh, I guess because he's with Morgan Stanley, so he goes off a lot of what, like Morgan's reports and what they're saying. He did sell Align, which I think is the Invisalign owner, a couple of weeks ago.
ALGN.
ALGN, yeah, he sold Align Technology a couple of weeks ago, and it's gone down a lot since.
Breaking down trend or breaking up trend.
Yeah, so that looks like a good sell. But anyway, back to Eli Lilly.
Yeah, making a new all-time high here. Up again, 444. Boy, oh boy, 9,000 shares. I mean, I don't know what pre-market high. I just keep an eye on the close. When these stocks, it's on a 1, 2, 3, 4, 5, 6-day winning streak. So just keep focused on that all-time high. 831.26 is your all-time closing high, and then 838.28. That was your high from yesterday. That's really the only numbers I could give you. You did get some VKTX news, right? That's trading up today. It wasn't for the diet drug related, but that's getting a little bit. That big buyer at 60 in this thing, but so having trouble getting back to 80.
How about Moderna? Let's talk some Moderna real quick too while we're in biotech land, because Moderna we saw got a pop on this like bird flu kind of nonsense a couple weeks ago. which that sold off. But then yesterday we got data that there's good clinical data supporting efficacy for mRNA vaccines for melanoma, which is of course one of the most like deadly types of skin cancer. And this has been, so back in December when Moderna was below $100, I started buying the stock because I was like, look, like I don't like this as a COVID play. That kind of is done. But this mRNA vaccine, you're seeing it have efficacy for HIV. You're seeing it have efficacy for melanoma and like all these things. I think down the road, like Moderna's still very expensive right now. But again, like if I'm buying it now to hold for 20 years, this is one of my favorite long-term holds.
It's been a great run company. I mean, they were the quickest to get the drug out there. We know of Novavax was trying, and then they couldn't even do it in time. 2 years later, they get it out there. Great run company. The one issue you got with Moderna here right now is they're now a cash burning company. They were making so much money off COVID, and they obviously, have a lot of coin banked, so that's going to help them from all the COVID shots. But now you're at a point here where this company's losing money. So they're got a lot of drugs cooking, trials, but I don't see them turning back to profitability anytime soon here. So that's the issue I have with Moderna.
Yeah, and again, I think this is a long-term play if you're looking at like swing trades or whatnot. Real quick, because we got 3 minutes left. I did want to talk some Lululemon reports earnings tomorrow. Maybe we'll do another preview tomorrow and spend some more time on it. So Lulu's been getting absolutely crushed. I think it's down now 40% off its highs from 500 to 300. I was looking in Benzinga Pro yesterday, and let me see if I can pull it up real quick because I was like, man, like what's the quarter over quarter, earnings look like here? Because I was expecting like a downturn. Not at all. I mean, I don't know what's going to happen on the earnings report, but I will say if Lulu trades down again after this earnings report, I'm gonna, I think, make a long-term buy because I talked about this a couple weeks ago. It's getting priced in as if this was like a fad stock. I don't think this is a fad stock at all. I think some of the growth has maybe slowed, but if you look at this, total revenue, 2.2 billion the quarter before, 3.2 billion the last quarter. So it went from 2.7 to 2 billion. So you did see a little bit of regression there. But then it hopped right back up to 2.2, then 2.2 again, then 3.2. Higher cost of revenue here. They're spending more money. I think things are just a little bit more expensive right now. But I'm not seeing like the big red flags in the quarter over quarter earnings reports here. So tomorrow will be telling, but I'm ready to buy Lulu here. Like, again, like I don't think this was a fad company. I think this will be around for years and years to come. A lot of competition. But I'm ready to bang the table on Lulu and make a buy here.
Chart looks horrible. I mean, if you lean on the low of the move, I'd be looking for 293.03 was your low of the move. I'm looking. I think I said this before. Like some financial engineering. Some way to cut cost or close stores or something along those lines. So I mean, but you see, you have the earnings, you have the catalyst, and that there's the low of the move. But man, maybe wait for like a green candle on the monthly.
Well, that's why I don't think I'm going to buy it ahead of the report, because if the chart and the market is telling me anything, it's that this report might not be great. But again, now the bar, which Sammy mentioned this as well, now the bar has been lowered a decent amount. And I guess, like Joel, as ugly as the chart looks, wouldn't it look a lot better if there's a big green candle after tomorrow?
The problem is bag holder central here, though.
Yep.
So you run into the same problem that the GitLab runs into. You get the pop-up, and you need a story change. You need a narrative change. Right now, this is called multiple contraction trade. What you have happening is not really the problem with the earnings not being there. It's the earnings growth is slowing, and you're in the multiple contraction stage where you had the growth investors, Lulu, and you got the value investors out are way lower because the multiple's been so high. It is getting to that point where at a certain point in time, that valuation will be more reasonable. We did the exercise on Lulu last week, and the PE has come down a lot. So if you still believe, that this is, obviously a growth story here, you're only paying 21 times forward earnings now. So it is getting more reasonable from a valuation. But it just seems like this is just not the value market. This is the market that wants growth. This is the market that continues to obviously want to, not value stocks. I mean,
But
I've
it's an
learned the
AI
hard way
play
here.
now. You told us that, Dennis.
Everything thinks it's an AI play, but it's definitely not an AI play. So
thought
I
your
mean,
buddy-
everything
I
has an
thought your
AI.
buddy
I was thinking
worked on the
everything has an
AI
AI
piece.
division. My buddy is actually in charge of the AI division at Lululemon, but that doesn't mean it's an AI play. It means that they're trying to use AI to better understand their customers here. Did they mention something like that? And does that help the stock? You know, maybe, but Lululemon is an apparel company. It's not an AI stock. Everybody wants to think they're an AI company. Everybody's going to use AI as a tool, but not everybody is going to make money from AI. So I think just the overall downtrend here makes it difficult for this stock to just all of a sudden turn around and start, you know, blasting off.
All right, guys. Well, it is 9:01 a.m. Eastern. That means, unfortunately, it is time for us to say goodbye for the day. Time for us to wrap. Joel, who do we got coming on with us tomorrow?
Statman new Ryan Dietrich will be joining us on tomorrow.
Woo!
So yeah, so good. We need some Ryan stats here. We pulled off the high. We'll see what we got through the month of May and see what Ryan has for us for June, and he even goes farther out than that.
All right, guys. Thanks for everyone who tuned in. Please smash the like if you haven't already. We will have live trading starting up right now after this. Stay green today. Peace and love, y'all. We will see you guys tomorrow.